Dear class, today we are going to present lesson 4, and this lesson 4 is going to cover the ledger. By the ledger, we mean this is the second stage in accounting records, where the previous session we discussed about the journal. So the second stage will be preparation of the ledger. On the preparation of the ledger, these are the list of the company individual account that are prepared based on account category. So the ledger separates the same information and making them together by account, and they keep a running balance of each of these accounts. So each account in the ledger, normally it has its own ledger page. The account name appear across the top. So each ledger normally has a 6 column. We have a column for date, and this is the column where the date of transactions is being written. And we have the details. On the details column, we used to write the corresponding account, and the debit, which means to be recorded the amount that is to be debited. And on the right hand side also, we have a date, that is the date of transaction, details, credit, and also amount of that. So the process of copying from the journal to ledger is called the posting. It is done in a line at a time from the journal. For example, if we take the case of Alex journal on a lesson number 3 on the previous sessions, the ledger can be prepared based on those information as follows. One, this is the previous sessions, session number 3, where we prepared the journal. These journals detailing us only which account to be debited and which account to be credited. So from the journal of previous session, we know that when Alexis started a business with the furniture, cash in the bank, so by individual account, we are going to debit furniture, cash in the bank accounts, and the corresponding account will be capital. And again, we have seen when Alexis make a purchase on the cash and the bank balance, so we are going together, we are going to debit purchases with the 300,000, and individually we are going to credit cash by 100,000 and the bank by 200,000. But again, Susanna, also our data, we make a sales on credit, so we are going to debit Susanna by 250,000 and the credit sales by 250,000. Again, what has been done on the purchases, make a purchases on credit, then we are going to debit purchase 400,000 and the credit Kituka as our creditor by 400,000. This on the ledger part, we are going to show this with the individual account. So the capital, being an account, has the two sides, a debit and the credit. And remember recording rule that the increase of capital is written on the credit side. So we are going to credit capital account, but we are going to write the corresponding account. So on the top, it is a capital account. Within the account, we write the corresponding account. So we have a transaction number 1, it involving on 1st January 2023. It has 3 accounts that can be involved. Have a furniture 300,000, cash 200,000, the bank 300,000. But again, we didn't have an further transaction until the end of the week. So we may end up finding a total which is 800,000 from a debit column, and which is the same for the credit column. So if we take a balance, the difference will be our balance. The difference will become this 800,000. We will do so in a furniture account. So the amount from a capital, we debit furniture account, and this signifies increase of the furniture by 300,000. At the end of the week, it will remain as 300,000, and this will be taken as a balance scale down. Also, in other accounts that are being involved for the week, cash account, capital introduced were 200,000, but on the 2nd January, we made a purchase of 100,000, so this left us with a balance of 100,000. Then on a bank account, the owner introduced the cash as a capital of 300,000. Then we make a purchases of 200,000, then leave the account with the balances of 100,000. And again, on a Suzanne account, we make a sales on credit of 250,000, and at the end of the week, no further transaction, therefore the balance remained 250,000. The corresponding on sales account, we made a sales on credit to Susan, where it is written on the credit side, and it is balance remain the same, 250,000. The other one is a purchases account that we make a purchase from a bank and a cash 100,000 and 200,000, and again on 4th made another purchase that is from Kituka 400,000. So this gives us a balance of 700,000. Again for Kituka, made a purchase of 400,000. This is our creditor, and hence thus balance stood at the end of the week. So after that, we make a preparation of a trial balance. So the trial balance is just a list of all business account that is current ledger's balances. So we just copy them from the ledger account. So the balances brought down, it is where they will appear. And the trial balance will have only a 3 column. The first column will be showing us the name of the account and whether this has a balance brought down on the debit side, it will be written on the debit side. And if the balance is on the credit side, then amount also will appear on a debit side. So on a trial balance, we will take the balances from the ledger. So the cash balance will remain with only 100,000 on the debit side, and the bank balance will remain with 100,000. Furniture, 300,000. Purchases, we have 700,000. Sales, 250,000. Susanna, Kituka, creditor, capital, etc. So at the end of the day, you make a total of each column. So we found out that the debit side must be equal to credit side, and that it is 1,450,000 for the debit, and the same on credit side. So this is how we prepare a ledger, and at the end of the day, we make preparations of trial balance. After that, we will see how the further session will involving a preparation of final account from a trial balance. Thank you very much.